I have big news to share because average mortgage rates just decreased to nearly a 6-month low and have been decreasing for the majority of July as well. I'll share how this news is impacting current home buyers right now, but also share the likelihood that the Fed is going to start cutting interest rates later this year. So let's go ahead and dive right in. I have a lot to share. So this is coming from the Mortgage News Daily. They actually basically survey lenders across the country, say, hey, what's your best rate if you're putting down 25% down? You have a fantastic credit score. What is your average rate today, which is on Monday, July 15th? The daily rate, according to them, is at 6.81%. Jumbo is at 7.04%. And VA and FHA loans is around 6.26 to just under 6.3%. Now, looking at daily rates for a 30-year fix, 1 year ago, we're at 6.89%. So rates are about 8 basis points less today compared to 12 months ago. But the big news, though, is this right here. The average daily rate, again, is at 6.81%. We haven't seen rates this low going back to the beginning of February this year, when the average rate was at about 6.63%. So basically a 5.5-month low regarding daily rates today. Also, according to the Mortgage News Daily, as of today, it says today marked the 8th consecutive day in which rates have been going down. So basically for over 1 week, rates have been coming down every single day. Now, this is just a day, right? So rates fluctuate, and they can fluctuate greatly on a daily basis and of course on a weekly basis as well. So it says here, we should consider that rates have been responsive to a small group of important economic report, namely the jobs report and of course inflation reports as well, because last week the consumer price index, or the CPI, was announced, showing that inflation came down lower than what was expected. That caused rates to decrease by about 14 basis points on that day. But more or less, rates have been coming down ever since July 1st this year. It also says here that tomorrow's retail sales data, which is going to be posted on Tuesday, July 16th, will likely impact daily rates as well. If retail sales happen to fall far enough below expectations, that would also cause rates to decrease. In contrast, if data comes in surprisingly strong, in other words, if retail sales surge, they increase, that will cause rates to also increase as well. So what the Fed wants to see is less people working, people earning less money, and also they want to see that retail data coming in lower than expected. In other words, if retail sales fall below expectations, that will decrease rates on Tuesday, when I actually will be uploading this video for you guys. So in any case, stay tuned for that. Also, I like to share multiple sources on this channel, right? So according to Investopedia.com, the daily rate as of July 15th today for a 30-year fix is at 6.70%, quite a bit lower than the Mortgage News Daily at 6.81%. Now, looking ahead, again, I'm making this video on Monday, but on Tuesday, we'll have retail sales. The forecast is calling for retail sales to decrease by 0.2%. The previous reading, which was in May, sales increased by 0.1%. So stay tuned for that. That'll be posted at 5:30 a.m. Pacific Standard Time, about 1 hour before I post today's video. Also, looking at this economic calendar for Thursday, another report that will be announced as well that will likely cause rates to fluctuate as well is initial and continuing jobless claims, a weekly report from the government. So that could also change the direction of rates as well. Besides that, there's not a lot of news besides some Fed members speaking that can impact rates. But other than that, not a lot of other economic reports that will be posted this week that could change rates. But some other news that is going to be posted is on Wednesday, the MBA's purchase index, which measures the amount of people submitting loan applications to buy houses, mortgage applications. That's announced every Wednesday at about 4 a.m. Pacific Standard Time. Also, we have housing starts and building permits also being reported on Wednesday as well. So stay tuned for that. Thursday, again, we have jobless claims. And on Friday, really not a lot of data that's going to be posted that day. In any case, let's also talk about the likelihood that the Fed is going to start cutting rates, right? This is pretty interesting. This is according to the CME group, their Fed Watch tool. Just Google that. And of course, I provide a link in my video description below for all the reports I go over on my videos. So this is the likelihood that the Fed is going to change the federal funds rate, which does indirectly impact mortgage rates. So our next meeting is scheduled in about 2 weeks. 15 days from the time of filming this video. The street is forecasting that we're basically going to be at 5.5%. So rates being unchanged in their next meeting in 2 weeks. However, September though, there's a 88.7% chance they're going to decrease rates to 5.25%. The federal funds rate's at 5.5%, so a decrease of 25 basis points. The next meeting is scheduled for November 7th, a 54% chance they're going to decrease rates yet again, down by 25 basis points. Then to end the year, December 18th, a 53.4% probability we're going to be at 4.75%. That's a 75 basis point decrease compared to the rates we have today. So therefore, the street is forecasting for 3 consecutive 25 basis point rate decreases in their next coming meetings, which is September, November, and December after July's basically nothing burger. The Fed not going to decrease or increase rates in their next meeting. At least that's what the expectations are. Now, I want to make today's video because people comment on my channel saying how rates, they don't matter. It's really home prices that really matter. And I really understand where you're coming from, because if you're a renter, you're renting a house, you want to satisfy the American dream of buying a house. Maybe you want to buy a home that's in an expensive area, and you want to see home prices absolutely tank in order to being able to buy a house in that neighborhood you want to buy a house. However, though, rates do matter, and I'm saying this because that impacts your purchasing power, which impacts home buying demand, home sales, and therefore home prices. So in my opinion, when rates, and because rates have been decreasing, we could see home sales basically rebound because rates have been coming down quite a bit. Again, down by about to about a 5.5 month low right now. Now, I found this report from Redfin. This was just posted a couple of days ago. It says, how much home can you afford as mortgage rates change? They basically look at mortgage rates. They're assuming a 20% down payment and also a standard rate for property taxes and home insurance rates. In any case, this is a really fantastic chart here showing how your purchasing power can change and fluctuates when rates fluctuate as well. So back in October of 2023, if you guys recall, we had average daily rates at 8% for a 30-year fixed rate mortgage. Now, again, we're at 6.8%, so down by about 1.2 percentage points. So if you're looking for a house, you want your housing payment, let's just say $2,500 per month. If you want a housing payment of $2,500 per month, that includes your principal, interest, taxes, and insurance, just based on these figures above there. Of course, these rates can fluctuate depending on the state and area you want to buy in, right? In any case, at 8%, you can afford a $341,250,000 home with an 8% rate. That would be a $2,500 payment. But if rates decrease and have decreased down to this number to 6.81 or 6.8%, now you can qualify for a $374,000 house. Whereas before, back in October last year, you only could qualify for around $341,000. Now it's at about $375,000. So because rates have decreased by about 1 percentage point, you can afford to buy a more expensive house. Let's take a look at 6% though. If rates went from 7%, which is right there, $369,000 to 6%, you could afford basically a $400,000 home compared to only a $341,000 home based on rates at 8%. So in other words, if rates were to decrease from 8 to 6%, you can afford about a $60,000 more expensive home because rates decrease by from 8 to 6%. So that's why I want to share rates. Rates do matter. In my opinion, if rates were to fall further, that's going to spur home buying demand. And also it could increase more people to list their house for sale. But the reality is that most homeowners are buyers as well. But in my opinion, we're going to see a decrease in rates will spur home buying demand much more so than home sales. And I have a lot of home buyers right now looking for rates to decrease so they can buy a house in the area they want. Here's what we also know as well. Because we have record high home prices and of course still elevated rates around 7% for quite some time, pending home sales have been basically falling off a map. This is a measure of future home sales. In other words, contracts being signed between buyers and sellers. Therefore, this is a great leading indication of closed home sales in the coming months. So based on this data from the National Association of Realtors for the month of May, this was just posted a couple weeks ago, their pending home sale index fell down by 2.1% compared to April and down nearly 7% year over year. Their index is at 70.8. That may not mean much to you guys, but I actually did some digging for you guys. At 70.8, again, this is an index which measures contracts being signed between buyers and sellers. That is an all-time record low for data that goes back to 1999. This is basically lower than COVID lockdowns back in April of 2020. So on a national level, we're seeing contracts being signed basically plummeting, which is going to cause closed home sales to decrease further in the coming months as well. But every market's different, right? In the Northeast, pending home sales increased by 1.1% compared to April, whereas every single other region except for the West, where it saw a gain of 1.4% decrease. So South tanked down by 5.5%. The West increased by 1.4%. On a year-over-year basis, all four major regions decrease. The biggest decline in the South, down by 10.4%. The smallest decrease was actually in the West, down by 2.1%. But wait, there's more. I want to share my own analysis of this data because the changes in pending home sales are absolutely quite remarkable to say the least. If you guys recall, 2023, we had basically multi-decade lows in closed home sales. And so far this year, we're basically on track to have fewer home sales last year. Not a big decrease, but a slight decrease compared to last year. So we're basically following the crash in home sales last year, extending into 2024 at these low levels, but not decreasing at the same rate we saw in 2023. In any case, the most recent data we have from the National Association of Realtors, this, by the way, is a data upload I pulled from NAR's website a couple of years ago, but I just add to it every single month. In any case, for the month of May, this is when the average 30-year fixed mortgage rate actually increased to a 5-month high in May. So this, in my opinion, the rise in rates that we saw in May, coupled with the fact we had basically all-time record highs in home prices, is the two main reasons why we saw a lack of contracts being signed between buyers and sellers, falling to an all-time record low. This is a new record low since NAR started tracking this data back in 2001. In other words, it's worse than the Great Recession of 2008. It's also much lower than the pre-COVID reading, which was 76.4 set in June of 2010. That was the previous record low when looking at pre-pandemic levels at 76.4. Now we're at 70.8. Also, just for comparison's sake, the all-time record high was set in August of 2020 when their index was at 128. And again, this May we're at 70.8. Just zooming above here. I mean, look at COVID lockdowns. Let me go down again. COVID lockdowns, that was the previous record low at 71.6. So the levels of contracts being signed right now are lower than we had basically COVID lockdowns nationwide, which is pretty telling. Also, 2008, look at this, 2008, which is right there, their index was over 80 every single month. Also lower there as well. 2009, higher than 82 every single month as well. So lack of pending home sales to say the least. Also, this decrease of 6.6% compared to May of 2023, this is fascinating because this has decreased in 34 out of the past 36 months. It has only increased on a year-over-year basis twice since June of 2024 or 21. Therefore, home sales have been sinking to very low levels for quite some time. The crash in sales in 2023 have not made a recovery in 2024. However, existing home sale prices, excluding brand new home construction, is sitting at all-time record highs. In addition, the year-over-year change is much worse than historical averages as well. The median May year-over-year change going back to 2010 is a decrease of 0.6%, whereas this year it fell by 6.6%. Also on a month-to-month basis, this is April compared to May this year, it fell by 2.1%. Compared to the median May month-to-month change, the change from April to May each and every year since 2010 is a decrease of 0.2%. This year, it fell by 2.1%. So big picture, not only do we have all-time record lows for pending sales, the year-over-year change is much worse than historical averages, as well as the month-to-month change as well. One thing I do want to add though is that look what happened 1 year ago. Back in May of 2023, the year-over-year change was down nearly 23%, and the month-to-month change down by 2.9%. You can see here we had basically double-digit decreases in pending home sales from May 2022 through August of 2023. So a crash in home sales in the last half of 2022 as well as 2023. So we're not seeing this similar crash because last year it fell by nearly 23%. Now we're only down by 6.6%. So in other words, we saw a crash in sales last year, and this year it has not made a recovery, to say the least. Also, just comparing pre-COVID levels, this May compared to May of 2019, down 34%, also down by 34% from May of 2018. So please leave me a comment below regarding today's video. Do you guys think that because rates have decreased to nearly a 6-month low, do you guys think that's going to spur home buying demand if rates stay below, let's just say 6.9%. A lot could change though, so I'll definitely keep you posted with latest developments, but what do you guys think? Do you guys think that home buying demand is going to increase because rates have decreased? Please leave me a comment below. Also, if you guys got any value out of today's video, please hit the like button. I greatly appreciate that. Also, consider subscribing as well. I post frequent housing market updates so you guys can be more informed. With that said, I appreciate you guys so much. Have an awesome day, and we'll see you in the next video.